All right, what you have to know is this. I don't care what you trade on all the markets that I follow, not just crude oil and gold, S&P 500, S&P 400. This works on all of them right across the board, okay? Doesn't matter what market that you trade. This exact same setup right across the board, okay? If you trade the Russell 2000, if you trade anything, I don't care, euro, whatever it is, whatever futures markets that you trade, this exact same setup and exact entry technique is how you enter the trade. There's two ways you can enter with market profile. And let me show you both ways. I'm going to show you one way that I've been really doing well with on the 5-sim Renko because it doesn't show you fib dots. I'm going to show you how to do that. Even works on the 3-sim also. The 5 is the best way to do it. I thought I'd show you this morning how to do it. And then with J signal. The bottom line is when you violate or get through high value area, you break through high value area, the market is strong. Okay? Vice versa, if you break down through low value area, I'm on crude oil right now. I'm looking at the red line that automatically comes up on your J signal. That's called the high value area. The low value area is comprised of the green line. Okay? The 5-sim has had no trades this morning there, Harry. That's why you use a shallow retracement indicator and a deep retracement indicator, buddy. You got to put them side by side. Okay? The 3 is what caught it, not the 5. The 5 has had no trades. There's not been one trade this morning yet. So there's been no signals on the 5-sim Renko on the oil market. I'll show you in a second. The 3-sim Renko is for shallow retracements. The 5-sims for deep retracements. When you get through high value area, HVA, high value area, when you get through it, the market is strong. You look for the first ABC long or 1, 2, 3 pattern long and the first pull-in bar, which happened at 7:50 this morning, entry with breakout pull-in bar. That's how we caught the exact short yesterday when it broke LVA, the exact short the day before, and the exact long the day before that. It was perfect. It was actually perfect to the exact bar. Or you take the first J signal and the first retracement with the triangle. The 5-sim Renko had no trades this morning, right? Let me show you the difference between a short-term and a long-term time frame. Now, the 5-sim, a couple days ago, we had a 250 tick move on the 5-sim. But if you look between the 5 and the 3-sim, I have two Renko bars I look at. I look at a long-term time frame and a short-term time frame. Look at my long-term time frame. It never gave us any signals. This is not a signal because we don't have a what? We don't have a triangle to pull us in, so that's not a trade. And it never gave us a trade before that. We've had no trades this morning on the 5-sim Renko. Okay? But we did have a beautiful trade on the 3-sim Renko because it's a shallow retracement indicator. Where the 5 is a deeper retracement, the market broke out. It never gave us a deep retracement, so we never got any signals. Okay? No signals on this. All right? You never had any triangle that came in, Steve. No order imbalance. None on the 5-sim. So what we have is when we first break through high value area, when we break through high value area right here, HVA, high value breaks out. Okay, you get a high value area breakout. Once you get a high value area breakout, HVA, here's how you can do it. Now, you can do it on the 5-sim also. We never got a retracement on the 5-sim, but this worked 4 for 4 the other day on the 5-sim also. I want you to take a look at when these market profile levels get violated. Now, watch this. If you break out and you get a spinning top or doji, now it's right at the breakout. Right here's the key level of the breakout, right? Here's the inflection point. If you get a breakout right there, and it retraces, if you get a pull-in bar and it's going up, that is a sign that you have a great entry right at this exact bar. Now watch how the 5-sim all next week does this. When you break out a market profile, it did not retrace and retest today. We never got a retracement on the 5-sim. It's a shallow retracement. But it'll be a little mini retracement that happens on the 5-sim. It's unbelievable how accurate this is on a lot of markets. You'll break out. There's a local trader that trades that trades near me that I taught this technique to that's doing very, very well. And they'll let it break out of HVA or LVA. They'll look for the first retracement even without the first fib dots because market profile broke out. Look for the first pulling bar. So that's your first indication that market profile broke out and we're going long to the exact bar. There's your exact bar. Or you can take the first J signal, let it break out. What happened yesterday is it retested. We got the first J signal and it shot straight up for $700 trade. When it broke through high value area, it was the exact same trade that happened yesterday, right? It's the exact same trade happened yesterday, just like this. Only went up almost 800 bucks. What I'm saying is this. Your alert should come on immediately. Once you break out a high value area, immediately when you break out a high value or you break below LVA or you break back inside of LVA, HVA, or you break back inside of LVA, you must alert yourself to get ready for a signal long. And if it's going to be a mini ABC, it's just breakout, retest, pulling bar. Breakdown, retest, pulling bar. Your stop is very small in this one. Extremely small because it cannot break that low. Very, very small stop when you trade it like that. And very small stop when you trade it like this on the first J signal after you break through HVA. Extremely small. All right? You're not going to get these retracements all the time on the 5-sim Renko, but you'll get them on the 3-sim all the time. The 3-sim is producing some beautiful trades on a weekly basis now based upon breaking HVA with a mini ABC or your J signal long. It's been working every single day like clockwork. You break through high value. We caught the big long yesterday, huge move up. The big short the day before, huge move down. Big short the day before. I mean, it's on a consistent basis. It's because of these value areas. So what you have to do is you have to make sure that when you break these, you got to be on your toes for a trade. And you got to be waiting for a signal. You got to get ready for a signal right when you break through this. Okay? If you take the 5-sim, if you're only trading the 5-sim Renko, you're not going to get fib dots sometimes on a shallow retracement. But you will get a breakout, retest of HVA or LVA, and then a pull-in bar. It happens a lot. In fact, on the 5-sim, when you're breaking through HVA and LVA, it may only retest HVA or LVA maybe 60% of the time. But of that time, if you get a pull-in bar, that's an entry. Because that's where the 3-sim is probably going to go long or short. All right? So be aware of that. Make sure that when you see this, when you get through high value area, don't make this difficult. It's very simple. If you get above the red, that's strength. If you get below the green, that's weakness. Look for the first breakout retest and look for it. You only play off the dojis and spinning tops. So if you play off the first breakout, even if it's a mini ABC, right here, off a mini ABC, you cannot trade unless you have a doji or spinning top. There's my spinning top I play off of. Right? And there's my pulling bar suggesting they're going to mark the market higher. It's a really good tip-off. It's almost like the market's tipping us off when it's going to go up and when it's going to go down. So it's a very simple technique and a very profitable technique to get in on the first retest of HVA or LVA when it first breaks. Really neat way to do it, or the first J signal long or J signal short. All right? So we've seen consistent with this way, consistency every single day now. This week, we've had an HV and LVA break right around 7:45 to the 9 o'clock area, and it's been the exact same setup. Breakout, retest long, or J signal long. So when we break back inside, like I said, the first retracement HV LVA with a pull-in bar works the same way in the 5-sim. Or what you can do is wait for the first J signal to go long with an overall order bar technique. Really neat way to do it. You don't want to get too far away from HVA or LVA. If you get too far away from LVA or HVA, the 5-sim produce an arrow, 5265, all the way up here. Look how far you're away from high value area. You left all this on the table if you're just waiting for the 5-sim Renko, all this on the table, and then you're trying to get in at a high down here at 65 or so on a pullback, right? So in other words, you let the market go all the way from 52.10 to 52.60. You let it go 50 ticks, and then let's get in a trade. It doesn't work that way, all right? Even when you trade the 5-sim Renko, you can't have a market that's coiled up down here and explode upward and then try to get long at the top. All right, so we got to make sure we're clear on that. You can't chase trades. So that's why I always say put the 5 and 3 next to each other, because this will get the shallow retracements for you. The 5 is great for continuations. But if you think you're going to get a good trade on the 5-sim when the market, the moving averages are flat as a pancake, you have to remember, and here's the neat thing about this too. The 3-sim and flatter moving averages will work better than the 5-sim because the market is in a, what? Symmetrical triangle. You're going to have shallow retracements on pullbacks when you break out or break down. You're not going to get deep retracements in a symmetrical wedge. It's not going to happen. You're in a tight symmetrical wedge this morning from 4 o'clock to 8 o'clock this morning. Symmetrical wedge there, symmetrical wedge here. So when you break out and retest, you're not going to get deep retracements on the 5-sim. You're going to get big explosions, and you're going to get shallow retracements to get in that continuation. It's a really big tip-off for you to understand that. Okay? So the bottom line is this. Make it easy on yourself. If you're trading the 3-sim Renko, or if you're in a flat, rangy market, I said yesterday we're probably going to go into a flat market today, right? I said we're going to go into a flat, rangy market in crude. And it's formed a symmetrical wedge. You're not going to get a break retest on a larger time frame. It's going to happen on the smaller time frames. So remember that. All right? Big symmetrical wedge, breakout. The rule of thumb is when the moving averages are flat as a pancake, I told you this 2 days in a row now. Let me show you, just to show you before we turn this video off. When you log in and look at this black chart, make it very simple so you understand this. When you log in, the moving averages are flat. I keep telling you over and over and over and over again, you are into a symmetrical wedge. This has happened the past 20 plus years I've been trading. It continues to do the same thing. Really easy to pick off when you take an ABC long outside of market profile. Very simple to see a symmetrical wedge. Look at that. Like I said, when the moving averages get flat as a pancake, you form a symmetrical wedge. 2 lower highs, 2 higher lows. That forms what? A symmetrical wedge. Look how flat the moving averages are. What that means, you take the first ABC long when you break HV or LVA. Look at that. And that's exactly when it matched up with my market profile breaking out on my ninja charts. That's how you trade flat markets. Flat markets or range markets doesn't mean you can't make money. Excuse me. It's for the professional trader that knows how to trade them. You just look for an ABC pattern long or ABC pattern short outside these profiles. So a really good way to do it, if you look at this J signal, the J signal happened right exactly at the break retest of 31, for God's sakes. For God's sakes, you can't get any prettier than this. It is a breakout retest of high value area on my number 3 pattern with the J signal. You cannot miss this trade. You cannot miss a J signal trade like this when the black charts are matching exactly up with exactly how I teach you how to trade symmetrical wedges. It's symmetrical wedges, I say we break out of symmetrical wedges, right? We break out and look for retest long, retest short. So if you do break out of a symmetrical wedge, you have to make sure you look for an ABC long or ABC short. It's one of the most profitable trades in a flat market. When the market's flat as a pancake, it likes to break out eventually HVA and LVA. This was the second test of the area, so you would not short this 31 to save your life, right? You wouldn't even think about shorting 31 because in a flat market, you sell the first test of HVA, you buy the first test of LVA, right? Well, it did it early this morning. 5 a.m. it sold the first test of HVA, and 6 o'clock it bought the first test of LVA. It already did its first test, and what do I teach you? Because we're more knowledgeable than the novice trader. I teach you that when I educate you, when it tests, you sell the high the first test, you buy the low the first test. So it caught the low, sold the high. You're not allowed to sell the high or buy the low again. So when you come to 31, you know you're not looking for a short. You know that. You know that because you know that you're not allowed to sell HVA even if the moving averages are in a downtrend. If it's a second test, you look for a break, ABC long, ABC short. Okay? And it worked out beautiful again this morning. Great trades happen like this all the time, guys and gals, with the J signal. This is the inflection point. Remember, you have to remember, this is the inflection point. You cannot forget that. That must be instilled in your head. This is the inflection point for an ABC long. Just like yesterday, it broke HVA, ABC long, it shot straight up, $800 trade. Just like that. We had the big short. It's a 150 tick short. Same thing, broke LVA, retested, short. So make sure that when you violate HV and LVA, the light bulb comes off. Say, hey, I got to wake up. I can't take a restroom break. I can't refill my coffee. I can't. This is a signal. I'm ready. The market's telling me, it's indicating that the market is a setup phase. I'm in a setup phase. I'm breaking through HVA. I'm now in a setup phase. I'm breaking down through LVA. I'm now in a setup phase. You cannot miss opportunities like this, or you cannot be profitable with J signal. You can't do it. If you let this market get way away from you and goes up 50, 60 ticks, and then all of a sudden you're taking these signals at 60, 70, 80, taking all this junk up here, junk, worthless, stop outs. Why even trade them? You got to get the inflection point where the order flow is going to accelerate the trade. There's a lot of novice traders going to get stopped out right at this level because they're shorting the high of HVA. We know better than that. We know it's already tested once down here. We look for a breakout retest long on HV and LVA. All right? It's one of the most profitable trades you can do in a flat market when it's flat.